in the middle of last month, the S&P 500 was pricing in a 33% chance of a recession here in the U.S. Credit, meanwhile, was only pricing in 9 to 12% odds. And it's a Bloomberg scoop. Howard Lutnick is signaling he may withhold promised CHIPS Act grants as he pushes companies to expand their U.S. projects. The Commerce Chief wants firms that won awards from the 2022 CHIPS and Science Act to follow in the footsteps of TSMC, which recently announced it will invest another $100 billion in U.S. plants on top of a previous $65 billion pledge. Big Goldman Sachs bonuses are drawing criticism. The firm's $80 million retention bonuses for both the CEO, David Solomon, and President John Waldron are, quote, poor practice, according to Institutional Shareholder Services, which is urging investors to reject the big payouts. The proxy advisor added that the pricey incentives lack rigorous preset performance criteria, which is particularly concerning for off-cycle awards with such large values. In a second recommendation late last week, Glass Lewis described the latest bonuses as excessive. Shonali?
We are going to get into those Goldman pay packages in today's Wall Street Beat. Joining us now, Bloomberg finance reporter Todd Gillespie. We've seen this before, not always at Goldman. We've seen it at JP Morgan, for example. We've seen instances when you've had these proxy advisory firms push back. It doesn't always mean the bank makes changes. The shareholders then have to vote on it. How do you expect this to play out based on what we've seen happen in the past?
Yeah, I mean, totally makes sense, right? Back in 2021, when Jamie Dimon, or 2022, I think Jamie Dimon got handed a $50 million retention bonus just out of the blue. You know, shareholders voted against that. I think only 31% of shareholders at the time voted in support of that pay package. But and what? These banks can still go ahead most of the time regardless, can still hand out these bonuses to these executives, right? These banks are citing, you know, super fierce competition for top executives at the top of finance, particularly in an environment now where banks are, you know, are fighting for talent against private equity firms with deeper pockets. You know, we know that John Waldron, for example, has had to turn down jobs from other top PE firms across the street. Goldman claims that it's doing what it needs to do to attract top talent. Whether this is the right way to do it, who knows?
Yeah, we'll have to see there. And as you mentioned, these are retention bonuses specifically when it comes to John Waldron. But I mean, have we ever seen a case where then the bonuses were knocked down? I mean, where realistically will this go, other than having a bit of bad press?
It's pretty unlikely they're going to be knocked down at this point. I think it would also show that Goldman, you know, it would be a bad look for Goldman probably from an optics perspective if they were to knock them down. I mean, one thing Goldman does say is, right, that these are stock-based awards. It's technically not $80 million each. It's $80 million worth of shares back in January. So the value of this could go up or go down over the next 5 years for these executives. So they argue that, you know, these are aligned with what shareholders want. You know, you're incentivizing David Solomon and John Waldron to do the best work that they can to increase shareholder value because it's now in their own interest more than it ever has been, right? But one thing that ISS is just saying, you know, and they came out last night with this report, is that, you know, it's quite poor practice for banks to be having multiple off-cycle bonuses at the same time, because both John and David got similar retention bonuses back in 2021, which still actually haven't vested yet. They vested in 2026. 30 million for David Solomon back in the time, and 20 million for John Waldron, roughly speaking, based on the on the price of those shares back when those were set. So they're really laying it on thick right now.
Is there anyone out there who says, I don't care if you pay David Solomon and John Waldron $80 million each. Give them $100 million each, because their stock has returned 315% over the last 5 years. They've beat out every single bank on the street. They've done better than JP Morgan. They've done better than Bank America. They've done better than Wells Fargo. They've done way better than Citi. I mean, as long as I'm making money, what do I care if they're making money?
Yeah. I mean, to be fair, over the past 5 years, if we're taking the depths of COVID as the benchmark, it's a little bit difficult. But yeah, you're right. Like it's
I
over
always look at a 5-year period just to make it fair. I'm not cherry picking duration, right?
Sure.
I've been looking at a 5-year period for 25 years.
Sure.
Right?
Yeah. I mean, it makes sense. I mean, yeah, and it's up 140%, I think, since David Solomon became CEO. So yeah, I mean, one could say absolutely, sure, these make sense, but at the same time, it's like how do you know that these are the executives that are actually, the ones absolutely, without them, could Goldman have got the same share performance that they have done? It's hard to know. We don't know that counterfactual.
But to me, as an investor, if you quadruple my money, I don't care.
Sure.
Right?
Sure. Yeah.
It's interesting, too. I've got to say, just a quick comment on this also. What's interesting to me is that both David Solomon and John Waldron this year was tapped to actually join the board also. And so a lot of the decision-making really coming up to these two folks, and John very obviously being kept around to try to keep the top job. Todd, we have to leave it there because we're out of time. Could go on. Todd Gillespie, of course. And not that you guys want this note, but we are only about a couple weeks away now, less than a couple weeks away from bank earnings. So we'll see if the money they brought in the last year is matching, and the first quarter is matching the last couple of years. Now, still ahead, we're going to look at some more stocks under the surface. Roblox launching a new format of video advertising on its gaming platform. We're going to give you details on open interest next. This is Bloomberg.
Welcome back to Open Interest. Let's get back to these markets right now because the S&P 500 hit session lows. It's now down about 0.6%. I want to go right under the hood and take a look at what is leading the declines. At least on a percentage basis, it's the airlines right now. Delta down 5%. United Airlines down another 5% as well. You take a look for reasons why. It might come from the sell side. You had a Jefferies analyst coming out and downgrading American Airlines and Delta from a hold or from a hold from a buy rather. Southwest, Air Canada also getting some downgrades as well. That's really weighing on the sector right now, as well as you consider the potential impact of tariffs. Some venturing that maybe you'll see less Europeans traveling to the U.S., which obviously would hit some of these companies. Speaking of other companies, they're across all industries preparing for President Trump's tariff announcement tomorrow. We'll get a read on the shipping industry next. This is Bloomberg.
A proposed U.S. trade measure has sparked widespread concern in the shipping industry. It would impose million-dollar levies on Chinese ships docking in the U.S. And critics argue it will divert trade away from U.S. hubs. But supporters say it will curb China's dominance in shipbuilding and logistics, and maybe more importantly, bring jobs back to America. This is all ahead of President Trump's tariff announcement tomorrow. Joining us now to discuss the effect on the shipping industry is John Wobensmith. He is the CEO of Genco. John, great to have you here. I guess first off, talk to us about your own fleet. You know, I mean, how many ships are built in China versus, you know, how many are built here?
Yeah, well, certainly zero built here. We do have a lot of Chinese-built ships, but less than 10% of our revenues last year were U.S.-based. But we have, you know, shipping has a way of, you know, figuring things out once there is clarity. So things are a little fluid right now, but if you look at major supply chain disruptions, you know, over the last 5 years, Panama Canal last year, right, with low water levels, the Red Sea, which is still currently going on. COVID, shipping finds a way to move goods from point A to point B. So what we're doing is we will either position our ships elsewhere. There's plenty of global trade. We're a global player. As I see, you know, 10% comes from the U.S. That means 90% is coming from the rest of the world. The other way to handle this is passing through to the end user, which we would have no choice to do. We've done a couple fixtures in the last week and a half. This is all very, very new to the industry, but we have inserted clauses into our charters to make sure that the end user is ultimately responsible for any tolls or port fees that arise out of this.
There's a lot to dig into there, especially when it comes to passing on costs. But I want to go back to ships. You mentioned you have a number of Chinese-built ships. You're taking actions to sort of mitigate that risk. What about buying U.S. ships? I mean, what kind of price differences are we talking about between a Chinese-built ship and a U.S.-built ship?
So the U.S. shipbuilding industry has diminished significantly since really the late 1800s and through World War II, right? That was part of our major industrialization that happened in the U.S., and that's why you're seeing Asia being dominant, China, Japan, South Korea in shipbuilding, because they've been industrializing. In terms of U.S. shipping, you know, we are very much in favor of building and revitalizing U.S. yards. But we look at it as three pillars. You need the infrastructure, which is the physical yards itself, which can take decades to get into place. You need technology, and you need a workforce in order to build this ship. I mean, let's face it, it's not Rosie the Riveter like World War II right now. There just isn't that trained workforce. And then we need crew. So we need more out of the merchant marine academies, the maritime academies across the U.S., and the training that goes with that in order to really revitalize that industry, which we think is a fantastic goal. We just don't think it should be necessarily married with the Chinese issues.
And I hear what you're saying, that, I mean, it's not like flipping a light switch. This is something that's going to take years, if not decades, when it comes to revitalizing the U.S. shipping industry. But just to distill what you're saying, are there ships that are suitable that you could purchase, or do they not exist?
They do not really exist in dry bulk. And just going back to your original question, if you're building a ship in Asia, and again, that could be Japan or South Korea and China, it's easily 3 to 4 times more expensive now to build in the U.S. because there just aren't that many yards. And again, you've got a very low workforce, and all of that would need to be revitalized, and it does take some time. It's not turnkey.
I just want to bridge the gap here a little bit, because if you are an everyday American who doesn't know a lot about shipping, you think about trade and you think about tariffs. That's the word that comes up most prominently. But you have a shipping expert calling this to Bloomberg News, this levies on the Chinese-built ships, a trade apocalypse. When you take the tariffs, this issue with the shipping, with the Chinese-built ships as well, plus, as you said, the disruptions that still exist in the Red Sea, altogether, What's the impact?
The impact is freight rates will go up, no matter what. And unfortunately, there's no choice but to pass that along to the cargo owner and ultimately the consumer. Is it an apocalypse? I don't tend to be that dramatic. But if you look at certain commodities, so let's look at U.S. farmers. So they have already been had a retaliatory tariff put on them by the Chinese of 25%. So already making soybean in particular uncompetitive. The Chinese are buying a lot more from Brazil. By the way, the farmers export anywhere from 30 to 40% of their crop on an annual basis. They're also dealing with higher input costs on fertilizer and energy. And then if you add port fees on top of it, they become uncompetitive in the world market. So their exports will come to almost to a grinding halt. Other commodities, so cement comes into the U.S. in large quantities, that will continue to flow. It's just the cost will go up. Gypsum, another one. You may not know what gypsum is, but that goes into drywall. Building materials, they will go up. So, there's probably demand destruction in agricultural products on the export side, but then inflationary aspects to other goods. And then if you look at the containers, this is also interesting. The containers, I think, is a lot less of a problem from an inflation standpoint. I think it will be passed along because it's such a smaller number. These are very large ships, a lot of boxes to spread out the flat port fees on. However, a container ship usually calls 3 to 4 U.S. ports. They will most likely, and this charge is right now anyway, proposed to be on a per port basis. So instead of calling 3 or 4 ports, container ships will most likely call 1 port. That will increase congestion. That pushes up freight rates. The ports, the smaller ports that they're not calling, will lose business.
All right, John, we got to leave it there. Fantastic to speak with you ahead of that tariff announcement coming tomorrow. That is John Wobensmith of Genco. Meanwhile, let's get a check on these markets right now. About an hour into the U.S. trading day, you can see that stocks still under pressure here. The S&P 500 down about 0.5%. The NASDAQ 100, big tech, also not faring too hot right now, down about 0.4%. That rally has been building in bonds while we've been on air, and you can see that 10-year Treasury yields currently off by 7 basis points. If you round a little bit here, Shonali, we are at 4.14% on your benchmark 10-year Treasury.
It is a pretty incredible level. We will keep an eye on it, particularly as we move through tomorrow and through to more economic data through the end of the week. But for now, let's get a look at stocks moving under the hood this hour. For that, we bring in Bloomberg's Nora Melinda.
Shonali, I've got eyes on Newsmax this morning. We're seeing the company surging for triple-digit gains. It's pairing a little bit now, but really on a roll. And this is after the company IPO'd yesterday. We know that this is a conservative media outlet owned by former New York Post journalist Chris Ruddy, and it really gained popularity during the presidential election period, and we're seeing a lot of Wall Street celebrating it. We saw the stock end about 780% higher at the close yesterday, but really on a roll here. I'm also keeping an eye on entertainment stocks like Live Nation and Vivid Seats. They're lower, they're trending lower this morning, and that's after President Donald Trump signed an executive order essentially trying to pull back on different scalping fees and other additional fees. He wants more transparency when it comes to purchasing concert tickets or any other entertainment tickets. We had our colleague Kayla Gardner in D.C. Write that up yesterday. But he's ordering that the FTC work with the DOJ to really crack down on this area. Lastly, I'm looking at a name in the green. That's PVH. It's owner of Calvin Klein as well as Tommy Hilfiger. It's up for double-digit gains this morning. They're saying that they expect sales growth to be flat or slightly positive this year. That's against what the street was expecting. They were expecting a decline of about a 0.5 percentage point for this company in terms of sales growth. Evercore is citing that some of the company's initiatives are starting to stabilize. But we do need to note that the stock is still down almost 40% year to date, Shonali.
Nora, thank you so very much. I want to bring you some breaking news as well, because a highly watched story in the world of hedge funds. 2 Sigma's John Overdeck is returning to the management committee. Now, this comes 8 months after he relinquished day-to-day oversight of the firm that he co-founded. Co-founder David Siegel, however, will not be returning. In a separate memo seen by Bloomberg, he says that he has full confidence in Scott Hoffman, one of the co-CEOs. The newly installed co-CEOs, Carter Lyons and Scott Hoffman, will keep oversight of the daily operations of Two Sigma in a turn of events. Now, coming up, we're going to go back to the markets. We're going to bring in Keith Lerner. He is Truist Advisory co-CIO and Chief Market Strategist. He says now's the time for investors to get more neutral. This is Bloomberg Open Interest.
All right, let's get a check on these markets right now. The S&P 500 off its worst levels of the session, still down about 0.2%. There's been plenty of volatility, and Keith Lerner over at Truist Advisors says that there's more to come. He's advising investors to be more neutral and less on the offense, writing that, quote, we expect the choppy market environment to persist over the next several weeks and likely months, and we are not likely to see a quick return to new highs. I'm pleased to say that Keith joins us now. So, Keith, new highs is one thing, but do you think we've seen the bottom?
Oh, that's a tough question right off the bat. I think we've seen a short-term low likely in the market, but I just think the upside's capped. And just for context, we downgraded stocks after being bullish back in late February around 6,000. And our point was that the risk reward was more mixed. Around 5,500, at least you're reflecting some of the uncertainty. You know, when you're down 10%, you're effectively pricing in about a 1/3 chance of recession. So at least some of that bad news is priced in. But, you know, at the same token, even though there's so much discussion about tomorrow, this big day we have ahead on the tariff announcement, as we look at the data itself, what we're seeing is obviously we're seeing the consensus bring down their economic forecast. That has not yet translated into profits. So we think there's some downside risks to profits and also profit margins with tariffs. Maybe one last point, that's offset by when you're down 10% historically, when you look a year later, we've had 56 instances going back to 1950. 49 out of those 56 instances, we've been higher a year later. So if I see like I'm saying somewhat neutral, is like on one hand, yes, 10% corrections is good. On the other hand, you're having some changes in the fundamental story, and we think a more neutral posture makes a lot of sense here.
Do you aren't you concerned that we get more and more negative news, economic hard data going the wrong way? I mean, we got JOLTS that were all wrong today. We got ISM that was all wrong today. And I mean, inflation numbers, CPI and PCE have been pretty good, but it looks like they're set to get worse and worse. The same could be said for growth.
That's right. And I think part of the market move down is a reflection that there's an anticipation that we will see some sluggishness. Now, the question becomes how much. And now, as we talk to some of our, like, say, retail analysts, they're seeing certainly some sluggishness, some slowdown in bookings for the summer. Think about hotels, lodging. I've even heard somebody talking about, a slowdown in mattress sales, which is a very discretionary type of purchase. So I think we're going to see that. And that's also why I think the upside is capped. If the market was priced, much lower, was still around the 20 multiple, I might be more interested in saying, hey, all the bad news is priced in. But in our view, you're trading at a 20 multiple, and you have downside risk to earnings. So going back to the point about, where the market is, I think as we get back to 58 to 6,000, there's just a lot of selling pressure, which makes for a choppy market. And relative to where you would have been a year ago, we think a more defensive posture, or at least neutral posture, makes more sense today.
One thing I find pretty stunning is that to find some safety here, investors are going to the bond market to look for diversification and a little bit of cover. But you're seeing dueling narratives. You have recession worries, you have potential inflation worries on top of those as well. Yet you have the likes of PIMCO saying that you could expect as good, if not better, returns from the bond market in the near term. And investors bidding down the 10-year to at least 4.15% at the moment. Does that all make sense to you, or do you think that there's an overcorrection in the move that you're seeing?
It actually does make sense, because I think as much as there's concerns about a one-time tariff hit, the market is clearly telling us they're more concerned about the growth scare, the growth side. And one of our big themes coming into this year was bonds are back, keep it high quality, and you are seeing that diversification benefit as well. And I will say, just more on a technical level, that 410 level on the 10-year Treasury is an important one. You break below that, it actually opens it up for some more downside. But even regardless of that, we just think that bonds are going to continue to provide, one, income, and two, stability in a market that's likely to remain somewhat choppy. And you're also seeing that defensive characteristics when you look at, gold, utilities, other areas, kind of saying a similar narrative that there's concerns around the growth outlook more than the inflation concerns.
Yeah, it was amazing to see in the first quarter, you actually had bonds rally and stocks fall. The first time we saw that happen in a 3-month period since 2020. So that certainly tells you something. You mentioned, of course, bonds in conjunction with gold. And when it comes to havens and sort of those defensive plays, where are you looking specifically in the stock market? We were having a great conversation with Ann Miletti that the classical defensive sectors are acting as defensive sectors once again. Are you looking towards some of those names?
We are, and again, we're looking at it in a portfolio context, so we have a little bit more cash. When we downgraded stocks, we raised our cash slightly. We've had gold. We've been bullish on gold over the last year. And then specifically to your question around sectors, we like utilities. Utilities are correlated with rates, so that's important to know. But they are relatively cheap. They're trading at about a 12% discount to the S&P. You have more stability in earnings relative to the overall market if we slow down. They're not really front and center on the tariff side. And then I layer on the technical side. We were seeing an improvement in relative price trends. So on the defensive side, I think that's certainly one that stands out. We are still overweight communication services and financials, because I think this tug of war is likely to continue. But on the defensive front, I think that combination, what we discussed, utilities, bonds, cash, really is a nice combination today.
Keith, great to have you on the program. Thanks so much for joining us. Keith Lerner there of Truist Advisory on a day when the market is down. We do see Tesla shares rising pretty significantly. We were showing them up in the pre-market almost 2%. And then after the live trade kicked in, they started to climb. And now Tesla is up to $270.84, even though it has yet to come out with its first quarter sales numbers. We don't expect those exactly until tomorrow.
Yeah, it's your biggest gainer on a points and a percentage basis in the S&P 500 right now. Tesla is, but it's not exactly helping the big benchmark right now when you have nearly 400 names moving to the downside. We'll continue to track what's going on in these markets. And coming up, the arrival of Trump's tariffs looms over global markets. We'll have the latest on the president's plans next. This is Open Interest.
Let's turn back to our top story. The president is set to unveil his global tariff plan tomorrow in the White House, in the Rose Garden specifically. He's offered some clues so far to what we're going to get for the latest Let's Head to Balance of Power host, Kayleigh Lines in Washington. So the president has said, Kayleigh, he's going to be putting reciprocal tariffs on countries that aren't quite as high as they tariff us. Should we take him at his word?
Well, we'll find out for sure tomorrow. I would point out it's today, Matt, that we're expecting the president will receive the reports from some of the most senior trade authorities within his administration. April 1st was that deadline for the Treasury Secretary Scott Bessent, the Commerce Secretary Howard Lutnick, and the U.S. Trade Representative Jamieson Greer to present their reports to the president about the trade imbalances and deficits, currency manipulation practices if countries are undertaking them, and ultimately what should be done about it. That said, even though he didn't have those reports in hand, in theory, President Trump did tell reporters in the Oval Office yesterday that he settled on the idea around these April 2nd tariffs a long time ago. And to your point, Matt, he suggested that in some cases the numbers will be lower than what other countries charge us, the U.S., in terms of import tariffs, suggesting this won't necessarily be the same rate that is applied to U.S. goods that other countries are importing. He's described it as, relatively speaking, he thinks the administration is going to be, quote, very kind. We just don't yet have a sense of what exactly that so-called kindness entails.
Kayleigh, while we have you, it's worth getting a check here on what's happening in the Florida races as well, given kind of what this means for the Republican Party composition in Congress.
Yeah, in the Panhandle, one of the special House races that is happening today to fill the seat vacated by former Congressman Matt Gaetz, it is expected the Republican is going to win. That's not really the one to watch. The one to watch is in the 6th District in the Daytona Beach area. This is the seat that was vacated by Mike Waltz, who is now the National Security Advisor. He won that seat by more than 30 points in November, and this was also a plus 30 district for Donald Trump in November. But the Republican candidate, Randy Fine, in this case, is not putting up those kind of numbers in the polls leading up to the vote today. In fact, there is speculation that he could end up within single digits of his Democratic challenger. This is not the kind of performance Republicans were really hoping for. In part, strategists I've talked to have said that this is maybe a question around candidate quality, and Randy Fine assuming that this safely Republican district was going to be an easy one to win, as he hasn't fundraised as much as the Democrat. But the other factor that is at play here is whether or not this is going to be a race that could be a tell as to whether voters are satisfied with the policies coming from the Trump administration, not just in regard to things like tariffs and the economy, but also the efforts of the Department of Government Efficiency. Democrats are pinning the race today in Florida, as well as the Supreme Court election that's happening in Wisconsin today, as in part being referendums on Elon Musk himself, who, of course, in the case of Wisconsin, has been incredibly financially active.
All right, Kayleigh Lines, it's great to see you. That is Kayleigh Lines. Tune in to Balance of Power for special coverage of President Trump's Rose Garden announcement on tariffs. Guests for today's special include former USTR Katherine Tai. Balance of Power will have extended programming today and tomorrow from 5 to 7 p.m. New York time. But I want to go to these markets right now because we've erased our losses. We were down as much as 0.5%, but you can see that we've fought our way back to positive territory. Big tech is leading the way, and you can see that in the S&P 500 because you have 324 names that are in the red right now, but then you have Tesla, Microsoft, Meta, Alphabet, Amazon, all pushing to the upside. And I want to take a look at the VIX right now because we know that it's been a choppy market. You have the VIX a little bit lower today, but I wanted to show this 1 year, you guys, because we're trading with a 22 handle. The average is below 17 when you blow it back a year. So clearly there's a lot of volatility in this market, and that leads us nicely to the big day tomorrow.
Yeah, and I have a little public service announcement. For those of you with Bloomberg Terminal, you can type WSL Politics, and that will pull up for you basically a spreadsheet of the tariffs that the U.S. charges other countries and the amount we import from them. I think it's pretty fascinating that you see China, Vietnam, and India all there at the top, but Italy the most among the European countries. Tomorrow on Open Interest, Nimrit Kong joins us of North Star Asset Management.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, I'm Caroline Hyde, and this is Bloomberg Technology. Coming up, a volatile NASDAQ. That's after posting its worst quarter in nearly 3 years. Plus, grants from the US CHIPS Act in limbo as the Commerce Secretary pushes semi-companies to expand their US projects. And amid trade anxiety and weaker Tesla sales, we sit down with the CEO of EV giant Rivian. But first, we check in on these markets that actually are trying to push back into the green after what was a pretty horrific quarter. The first quarter for the NASDAQ 100 was the worst since the second quarter of 2022. You are seeing the sell-offs in the terms of more than 20% for many of those magnificent 7 names. NVIDIA down almost 20%. You see Broadcom having its worst quarter in its history. Let's break down the moves and what it signals for this quarter now. Isabel Lee is with us for more. And it was the most loved names for 23-24 that got punished the hardest.
Exactly. And altogether, they shed some $2 trillion in market cap. Lots of superlatives out there. We won't really lose track. Microsoft, Amazon, Meta, down 20% from their peak. Broadcom down 33% since December. And it's just interesting how these tech behemoths are now dragging the markets lower. And for more than 2 years, they've been the darlings of AI. They're the ones that powered the markets to really its bull run. And now questions about AI are coming at a time when there's just really a lot of macroeconomic uncertainty all around. And throw in DeepSeek. I read this and it really struck me with Alibaba's co-founders saying they're rushing to build new facilities to get ahead of AI services. And in contrast, you have an analyst report about Microsoft saying they're walking away from new projects. Microsoft, who've committed almost $80 billion for data centers. They've earmarked that, and altogether, these big spenders earmarked $300 billion. So what's next? It's really an interesting time.
And you're basically pointing to a very messy narrative for AI right now. Joe Tsai clearly trying to dash the hopes of AI, saying there's a bubble here in the United States. But at the same time, as you say, Alibaba is busy investing more than $50 billion itself in AI infrastructure, in the future of artificial intelligence. And then we have TD Cowen, which continues on this narrative of Microsoft. Are people feeling that at these valuations, with more than a bear market ultimately, and a lot of these names down more than 20%, as you say, is now the time to start buying in? Do we feel that factors in, that prices in, moving out of the bubble?
It depends on who you ask, but I interviewed a mutual fund manager, and he says that tech is still expensive. It's still volatile. I mean, yes, it's come down. It's fallen to 24 times estimated profits from 27 last month, but the historical average is still around 20. So it's still expensive, but they still own it. He said he has a little, because he calls it, quote, risk management. So you really see that they still have a foothold on the market. But it's really interesting because the IPO market, you expect it to be hot, but it wasn't. You look at CoreWeave, it was a dud. Although Newsmax, maybe that's the exception. That was exciting. It surged around 800% yesterday, and it's still 100 today.
A retail name, yes, and a very different business model from CoreWeave. But it's notable that CoreWeave is actually up more than 10% today.
Okay.
So maybe we're getting a little bit of buying around the edges on what had been a pretty beaten up name. It's now just above its IPO listing price. But it does just seem so murky for public market investors when they're looking at private markets and they're looking at a $40 billion round for OpenAI. Sam Altman saying that there's basically insatiable demand and his GPUs are melting because everyone's using his product. Is there still, though, the tariff overhang that perhaps lends to the downside for these names?
Absolutely. Before, the narrative was just like tech valuations, AI, but now it's like Liberation Day tomorrow. I was just talking in 6th floor upstairs with Anne Miletti of Allspring, and she said, we will get some information tomorrow, but not the clarity that everyone is hoping for. It's Liberation Day, but I mean, what does that mean? So she was saying that we're still on the defensive, we're still on the wait and see, because what will happen? I mean, everyone's hoping that we will have a magical list tomorrow per country, per tariff, but we won't see that. So she's still very concerned. And if you look at Bitcoin, which is really the risk proxy, it's down around 10% this year, but from its peak, it's down 20%. And I know that Bitcoin has a lot of fans, but also skeptics, but one can't deny that it's a broad gauge of risk sentiment. And for now, the gloom is palpable.
It is. Well said, Isabel Lee. We thank you for that breakdown. Let's just get into the weeds on chips specifically now. Commerce Secretary Howard Lutnick may withhold CHIPS Act grants to push companies to expand their U.S. projects. That's according to sources. His goal is to generate tens of billions of dollars in additional semiconductor investment commitments without actually increasing federal grants. Bloomberg's Peter Elstrom joins us on this now. We'd all known that President Trump was not a fan of the Biden-Harris administration's CHIPS Act, even though it was bipartisan in nature. But it looks as though they're looking at a different way to orchestrate it.
Yeah, that's exactly right. So just to back up a step, the CHIPS Act, of course, was passed with bipartisan support. The whole idea is getting these chips companies to invest more in the United States. It's $52 billion in grants and then tax credits, which are very, very important here, too. So the Biden administration scrambled in their last days to try to finalize the agreements with a bunch of the most important chip companies in the world, including TSMC and Samsung and Intel and Micron. They finalized the terms of these accords, but they didn't disperse all the money. The whole idea was that these companies would hit benchmarks and then the money would go out. So what Lutnick has decided to do is he's decided to use those disbursements as leverage with these companies to try to get them to commit even more money to the United States. So the CHIPS awards are not going to go up in terms of value, but before he actually writes those checks, he wants companies to come forward and to pledge more money. The example for this is TSMC. TSMC originally was going to invest about $65 billion in chip capacity in the United States. It came forward and they said they're going to put in another $100 billion. The Trump administration loves to be able to have those kinds of announcements, especially TSMC is the most important chip maker in the world right now. So for them to say we'll put another $100 billion in the market is very important.
The administration would say that was the effect of tariffs. TSMC has said they just like the American market and want to invest there. But what's also interesting is the nuance on the tax credit, Peter, because in many ways that's more important than the grants.
Right. For many of these companies, including TSMC and probably Samsung and Intel also, the tax credit is very, very important. It could be a lot more money. And so there are discussions about maybe increasing that tax credit. It has been 25%. It could be even more in the future. And that's important for companies that actually have the money right now. If you can put in $100 billion, it's easy to do the math on that. That's $25 billion in tax credits for you. That can save you a lot of money down the line. And you're right, TSMC sees a lot of opportunities in the United States market to be able to make investments, build some of those cutting-edge chips here, and then sell them to domestic customers. You also have companies like Samsung and Intel that could do things like this, are embarking on these kinds of projects. But Lutnick is exerting a lot of leverage right now in these companies to try to get bigger numbers, more eye-popping numbers into the headlines so that they can take credit for bringing some of this production back to the United States.
At a time when, with a lot of uncertainty, particularly with tariffs hanging over the semiconductor industry, it must be a difficult time to commit to more spending from these CEOs.
Right. You're just talking about the tariff uncertainty out there. I guess we'll find out some things tomorrow, but a lot of this we just don't know at this point. And you're right. Lutnick and the Trump administration have pointed to tariffs as part of the reason that some of these companies are investing more in the United States. In the tech sector, the chip sector in particular, it's unclear. We don't really know what the tariffs are going to look like. There's been talk about putting tariffs on the chips themselves, maybe the products, the end products that chips go into. It's not clear exactly how that's going to play out. So I think they need more information. And of course, the time frames are totally different. They're changing these policies almost by the week, as we've seen. And when you invest in a chip company, you have to plan for decades at a time. So the time frames really don't match up here. They're gonna have to resolve some of those conflicts going down the line.
Peter Elstrom, brilliant to have you. Thank you very much indeed.
Thank you.
Let's stick on chips and chip makers. Global Foundries. Well, it's exploring a potential merger with the Taiwanese chip maker United Microelectronics as a way to create a more resilient manufacturer of older generation semiconductors. It's all according to sources. Now, a deal would face multiple hurdles, including financing, potential opposition from Taiwan's government, and regulatory approval from China. And another chip name that, of course, is affected by potential CHIPS Act grants, but also the new change of CEO, is Intel, off by 2.4%. And that's after Lip-Bu Tan took to the stage yesterday. We heard him for the first real time articulating the future of this business under his leadership. Analysts saying they liked his reality check. They like his focus on talent, key, and client, secondary, but maybe lacking a little bit of detail on what next product innovation will be coming. We're off by 2.3%. But coming up, Tesla, it's slumping again in Europe when it comes to sales. The shares are interestingly on the higher side. The latest numbers in terms of sales from France, dismal. We'll discuss that next. This is Bloomberg Technology. Let's just check in on the shares of Tesla. Now, they're actually rebounding this day, up more than 5% after what, of course, was a pretty horrific quarter previous, down 35% in Q1. We're up 5%, even though sales in France fell 37%. They actually fell further in countries like Denmark. And that's as we expect Tesla's global auto deliveries for the first quarter to come out tomorrow. Bloomberg's David Welch joins us for more. Tesla's woes when it comes to real fundamentals, when it comes to sales, looking ugly worldwide right now.
That's right. They've got a few different pressure points here. Clearly in Europe, given what's going on politically and Elon Musk's involvement with the Trump administration, some buyers are shying away, to say the least. But there are some other factors here. There's a lot more competition in the EV space now in Europe, in the U.S. especially, and in China, BYD is coming on strong and taking a lot of market share. And we do have a Model Y changeover here, and they make that vehicle in every Tesla plant, which means you're going to be losing a certain amount of production. It's hard to quantify how much that's biting into sales. I think that's very real, so let's not get too carried away with buyers don't like Elon Musk's politics. There are some who don't. I think that's real, but there are some just regular business factors here with Tesla and their product changeover that are affecting it. And also, he's got a lot of competition in BYD with record sales. They just keep growing and growing, doubling sales since last year. They're a real force, and Tesla has a real business in China. So add those together, and sales are down. And we'll see what happens tomorrow when the numbers come out.
I think that's really important to note the competition, the element there. It's interesting, Wells Fargo putting out a note today saying Tesla just needs some magic at this particular point, because they do say, yes, you've got this turnover in terms of production, but are people really going to be rushing out for a new iteration of the Model Y? They worry about cannibalization of any cheaper product. And there's also the fundamentals of the US in terms of that $7,500 buyer credit that's likely to come away, right?
That's right. Look, you could see a little bit of a bounce for Tesla, particularly in the U.S., because Tesla is least affected by tariffs among the car companies, but they still would get hit with some. And some buyers may say, hey, Tesla has parts that are imported, so I don't want to have to pay more for a Tesla in 3 or 4 months because of tariffs. And then some people we've seen this so far with numbers that are out. Buyers are going out there thinking that if Donald Trump is going to make good on his tariff threats, he will probably make good on his threats to get rid of the $7,500 EV tax credits. So we've seen a jump. We saw it in the fourth quarter. We're seeing it again so far with the companies who've reported in the first quarter. Ford and Honda both had big jumps in their EV sales so far, and so did Hyundai. So people are going out, Americans, I should say, going out and buying EVs before the credits go away. And Tesla will probably take advantage of that and get a bounce from it as well.
We'll see how those deliveries shake out when they are published later in the week. David Welch, thanks for the latest on all things Tesla. Let's dig in further. Jungheng Lee's with us, founder and CEO of JL Warren Capital. You're an independent equity research firm focusing on Chinese companies, but also listed multinationals in China. You bring such expertise when it comes to Tesla, its history in China, and the fact that it's kind of losing its edge over there. How much are we seeing it lose out to competition right now, Jungheng?
It's very interesting. Tesla has a not so long history in China. GF3, which is the largest factory in Shanghai, now accounts for about 55% of the global shipment, was only started to make cars back in 2020. That's 5 years ago. So, and since 2020, the EV adoption in China accelerated, initially at 160% year over year, then gradually comes down to 90%. 70% and 50% year over year last year. So in the process, Tesla has been losing market share to in a market that it has created and helped to accelerate. So 2020, Tesla's market share in China was double digits, about 11-12%, and today it's only 4%. So it's really interesting. Even though China remains to be the only major market that grows its sales for the brand, it's trading the overall growth of the China broad EV market.
Yeah, give us the competition. Is it all about BYD? There's also Xiaomi, which has flipped from a phone manufacturer to a car manufacturer. Now there's current headlines about Xiaomi and a fatal accident that occurred. Many worrying about FSD and ultimately AV issues with that particular model. Is that something to be keeping an eye on?
Yeah, I mean, I think it's in the case of a DeepSeek, if anything, that story tells you how fast the Chinese can commoditize software. Same is the case with the hardware. So it's not just BYD, it's everybody. Yeah, it created a market. Tesla helped to create a market that introduced a lot of competition. So over the course of 5 years, Xiaomi is the latest competition. But meanwhile, there's the three large independent EV makers that are listed in the U.S. Not saying like everyone is as profitable as Tesla, but incrementally on an incremental scale, Tesla's been losing market share because it's just not able to keep up with the product new launches that the market China market uniquely demands. So and Xiaomi report this morning is very eye-catching in a sense that now EV is no longer just a vehicle, right? I mean, it has elevated to a technologically like a new height. So FSD, autonomous driving, it really invites a lot of new issues such as who is responsible in case there's a bug in the software that causes accidents that becomes tragedy or like a death. So is it the software maker, the driver, or the battery maker, or any components maker of the car? So I mean, those issues need to be addressed before commercial adoption of the FSD can be seen anywhere in the world.
Jungheng, what we haven't discussed is politics. Many would say, if you look at Apple, for example, there was an erosion of market share. Some people felt that it was because Chinese purchasers wanted to buy domestically made products. Is that happening in the EV space at all? Or is it more that the competition is fierce and the price point is better?
I don't think Tesla has the same issue Apple has just yet. I think the brand is strong. China's issue is really product issue, competition issue. I mean, it's very different from what we see in the Western markets, where Tesla's, the Elon Musk's polarizing politics, cannibalizes the buyers' demographics. But in China, no. The price is still in the upper middle sector, and the brand is strong. It's just very slow in launching new products, and there's a product fatigue. And then the competition is really offering a lot more attractive, exciting newness that the consumers in China demand.
Junghang, it's so good to get your expertise on China and the demand there. Junghang Li from One Capital, we appreciate it. Coming up, SoftBank gives OpenAI a $300 billion valuation. More on the latest funding behind the ChatGPT maker. That's next. This is Bloomberg Technology. Time now for Talking Tech. And first up, SpaceX. Well, it's launched the first ever human spaceflight over the Earth's polar regions. The Fram 2 mission took off a Falcon 9 rocket Monday evening, carrying 4 passengers. The trip is expected to take 3 to 5 days and will be used to conduct research on the impact of spaceflight on human health. Plus, the ECB president, Christine Lagarde, says that the use of AI could upend Europe's social model. Speaking at an ECB conference, Lagarde recognized the productivity gains that could be achieved with AI, but warns that the technology also has the potential to increase labor market inequality across the region. Meanwhile, SoftBank is seeking a loan of as much as $16.5 billion to help fund its AI investments in the United States. It's all according to sources. The bridge loan would help to finance that $500 billion AI infrastructure project, as well as the $40 billion funding round, of which it's committing $30 billion to, which it leads on OpenAI. Talks with banks are in early stages, and details may change over the coming weeks. But we're going to stick with SoftBank's funding of OpenAI now. The company behind ChatGPT, of course, says it has finalized that funding round of a record $40 billion. It was led by SoftBank, and it's putting the company now at a $300 billion valuation. For more, Bloomberg's Seth Thiegerman joins us. So it's interestingly structured, but SoftBank basically is giving $30 billion, and then there's other investors, Coatue and the like, that are chipping in the other $10 billion.
Yeah, I mean, this is an incredibly complex deal. SoftBank is basically creating a syndicate of of investors to help them finance this, but the round is not happening all at once. There's 10 billion now, 30 billion later, but also maybe not 30 billion later. It depends on whether this company, OpenAI, can restructure as a for-profit or not. So as far as these rounds go, unprecedented in size, but also kind of unprecedented in complexity.
And also a new relationship being formed between Microsoft and OpenAI, because before they were the biggest backer, really.
For sure. I mean, I think we've all felt that there's been a slow motion split happening for the last year and change between these two companies. Microsoft is still part of the syndicate of investors here. That relationship still stands. But if this deal goes through, by the end of it, SoftBank will presumably be the largest financial backer of OpenAI, displacing Microsoft. And at the same time, SoftBank is key and integral to helping OpenAI diversify away from Microsoft on the data center side.
The revenue numbers, though, that we're starting to get a glimpse into, they're good. We're seeing spectacular growth for OpenAI. And meanwhile, Sam Altman continues to worry about whether we can deliver. The products are so successful that his GPUs are melting. How are they going in terms of an internal growth model?
Yeah, I mean, again, you're seeing revenue triple or more than triple from the last year, potentially, from the projections that we've seen, to 12.7 billion, I think, for this year is the estimate. At the same time, where's profitability here? And we have seen that cash flow positive, not projected to come until the end of this decade, and that's why they need to raise tens of billions of dollars to prop up this business.
That compute, it ain't cheap. Seth Fiegerman, running the pun, we thank him. Alibaba, meanwhile, readying to release an upgraded version of its flagship AI model as soon as this month. Called Qwen 3, the update is the latest in a flurry of AI models released as competition from rivals OpenAI and DeepSeek really heat up. Alibaba just released its Qwen 2.5 model last week, allowing text, picture, audio, video processing that was efficient enough to be run on mobile phones and laptops. Coming up, Tom Wheeler. He's the former FCC chairman and current visiting fellow at Brookings Institution. He's joining us next for his thoughts on big tech in the age of tariffs and global trade wars. Meanwhile, some deal potential. Qualcomm. Is it looking to buy Alphawave in the United Kingdom? Another chip company currently up 45% on the reports that Qualcomm could be making an offer. Arm, we understand, did decide ultimately not to pursue Alphawave purchase. That was reported by Reuters. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, and we have a slight bounce back after the worst quarter for the Nasdaq 100 since almost 3 years. We're up 0.6%. In fact, technology is on the higher side when you looked at Nova in China, up almost a percentage point on the Golden Dragon. We're also looking at the Stock 600 in Europe, which now is closing up more than 1.1% on that tech index. But this is all amid the worries about tariffs, about Liberation Day. Let's just go there, because the EU says it's ready to fight back against President Trump's global tariffs, stating that they have, quote, strong plan to retaliate if necessary. Let's get more from Kayleigh Lines over in Washington. And Ursula von der Leyen trying to ready a response here.
Yeah, we've already seen the EU promise a response to the 25% steel and aluminum tariffs that have already been announced and put into place by the Trump administration. That will affect about 26 billion euros in goods, from Harley Davidsons to things like bourbon and whiskey. But what the EU is promising here is potentially greater retaliation after tomorrow, which is assumed to be the implementation of 25% tariffs on auto imports, which obviously affects European auto manufacturers, as well as whatever reciprocal tariffs for EU nations the president ultimately decides on. As for what that retaliation could look like, the big question here is going to be whether or not the European Union decides that anti-coercion instruments are going to be justified here, which is essentially a set of tools that are designed to be in response to countries using trade or other economic policies to try to coerce the European Union. That could have specific implications for big tech companies in particular, keeping in mind that one of the anti-coercion instruments could affect intellectual property as well as digital services trade, things that technology companies obviously are involved in. The irony is, Caroline, if ultimately that is how things end up in terms of European retaliation, it is one of the things that President Trump is most upset about in terms of what he sees as unfair practices by Europe. It's not just about tariffs, but so-called non-tariff barriers, which he sees as not just the value-added tax, but also some of the regulatory policies around technology.
I want to go there in a minute, Kayleigh, a little bit deeper, but for now we're seeing some European response. Mercedes, of course, big automaker in Germany, saying it's pulling its U.S. entry-level cars because of Trump tariffs. Of course, the cheaper Mercedes, they're going to be hit the most in terms of ultimate profitability when shipped to the United States and tariffs upon them. So Mercedes is pulling its U.S. entry-level cars over the Trump tariffs. But then go to the digital services side of the equation. As you said, the irony is that was what really annoys big U.S. tech. In particular, Mark Zuckerberg seems to be his eyes on the digital service tax. And how would that be rectified, or how would that go deeper if the EU responds in this way?
Well, it's not just Mark Zuckerberg, Caroline. President Trump doesn't like this either. He is repeatedly in his remarks to reporters talking about the justification for imposing tariffs on trading partners like the European Union as them being unfair to U.S. technology companies. He has said this on multiple occasions. As for what that looks like, it could obviously manifest in a number of different ways, including overall just the tightening of regulation around big technology companies, as the European Union obviously is a big importer of services, which gives them a little bit of leeway as to how exactly those services businesses are able to conduct themselves. As I mentioned, intellectual property rights also one way in which anti-coercion instruments could come into the picture. All of that said, there could potentially be some serious retaliation for that retaliation from President Trump, as we have already seen in response to the threat of retaliating against those tariffs on Harley Davidsons and alcohol products. He's suggested a 200% tariff on things like European wine and champagne. So this could go back and forth in a lot of different rounds, Caroline.
Retaliation on retaliation. Kayleigh Lines, thanks so much. Now, amid, of course, this US-EU trade tension and the brace for tariffs, we need to bring you an expert voice. Tom Wheeler, he's the former FCC chairman, current visiting fellow at Brookings Institution. You are putting so much thought into the impact of this tit for tat, let's call it. But what ultimately do you think the US can achieve here for its US big tech companies with the threat of tariffs? Anything?
Well, I think Kayleigh did a terrific job of explaining what the issues are here, Caroline. But at the root, there is a sea change in what tariffs are all about. That could be forthcoming. We don't know what's going to happen exactly tomorrow, but if this discussion of responding to regulation comes through, traditionally, tariffs were imposed to protect production. But on February 21st, the president issued instructions to his tariff enforcers, instructing them to deal with how can they protect big tech profits. So the move from protecting production to protecting profits, as I said, is a sea change. And if we see that tomorrow, undoubtedly the EU is going to respond. And this won't be the first step. There will be next steps. And we're entering a world that we really have not experienced before.
Can you go into how you've thought about this might even work? Because there's one thing about tariffing a product, but tariffing data flows, how does one do that?
Exactly. There's a huge difference between cars and champagne and zeros and ones, right?
Shame, but yes.
And so you know how to tariff a bottle of champagne that's coming in. How do I respond to zeros and ones? And particularly, I think there's two parts to that. One, how do you respond when those digital services are going out of the country into Europe, where they're being regulated, rather than being brought in from Europe like a bottle of champagne? And sure, you can go after European companies like Bookings.com and those, but that's the tip of the iceberg. That's small potatoes. How do you deal with? You then have to how do you deal with data flows? You then have to get down to the question of, okay, let's just think about this. Where are the data flows in and out of the EU? Well, they're financial transactions, even more than digital services activities. So do you put some kind of a tariff on those flows? Do you put some kind of a tariff on when information is accessed in American databases? I mean, there's a whole new world that we're entering here. You know, the United States dominates the cloud services market. When you access a cloud service provided by an American company, is there a tariff on that?
Right.
I mean, this move from hard goods to soft goods is revolutionary. And as I said before, what happens tomorrow is just the first step, not the last step.
So take us through a few more steps, and whether ultimately the desire to retaliate, to protect profits, could actually backfire, could end up making us more bifurcated with Europe.
So the fascinating question here, Caroline, is will Donald Trump make European tech great again? Because of the fact that he is creating reasons to sever relationships with American tech companies. You know, the underlying theme of the relationship between the U.S. and Europe has been around security. And the European countries have all recognized they have to step up to their own security. But what is security today? You know, sure, you can switch from making cars to making tanks, but that doesn't reflect, for instance, what's been going on in Ukraine, where it is not expensive, heavy weapon systems like tanks that are decisive, but inexpensive, software-based systems like drones. And so we've seen a change in the battlefield, where it used to be that software supported hardware, kinetic hardware systems. Now you have software instructing that hardware what to do.
Right.
And you've got to believe that the Europeans, as they go to increase their defense capabilities, aren't going to ignore the fact that it's not just hardware anymore, it's software. And can we rely on United States software service providers? You know, for instance, when Donald Trump shut down Starlink's access to the Ukraine army as a part of a leverage with Zelensky.
Food for
what
thought.
kind of message did that send?
Tom Wheeler,
about
we must leave it there from the Brookings. We thank you. We welcome our global radio and TV audiences now. EV maker Rivian recently announcing it will be spinning out a new company called Also, with the aim to develop EVs for short trips. $105 million funding from Rivian and VC firm Eclipse. For more, I'm very pleased to say we're welcoming Eclipse partner Jatin Bell and Rivian CEO RJ Scaringe. Great to have you both here. And RJ, I start with you. The spin out of Also now. Why is it better now to let it thrive in a solo manner?
Yeah, well, thanks for having us on. Yeah, as we think about overall transportation space and what needs to happen, of course, there's electrification of the vehicles and the infrastructure that we know of today, and that's what Rivian's been focused on, of course, first in the United States, and with our R2 program, soon Europe. But there's a lot of trips and a lot of miles that are much shorter distance and actually work better with something that's a much smaller form factor. And so we kicked off a skunkworks team a few years ago to look at how we could take our core technology stack and apply it in a very low cost, much smaller form factor. And as that played out, we realized that the idea was really had a lot of legs. It was a powerful idea, and we decided that this idea was big enough to deserve being its own business. And so we took the decision to spin it out Eclipse led the financing of that with a $105 million investment, as you said. And we're really excited about what's to come. We haven't shown any of the products yet, but they're absolutely incredible.
Let's therefore ask Jiten, how is this relationship going to evolve? What's the sort of closeness you're going to be doing? Because RJ is going to be on the board.
Yes, I think it's exciting because I spent many years at Rivian working closely with RJ, and now in this new role at Eclipse, really excited to invest in this opportunity and really disrupt the micromobility space. So yeah, I'm really excited to partner again with RJ and the Rivian team, as well as the Also team to bring this vision to life.
Jiten, I ask you the consumer issues here, though. We're a little bit worried, to say the least, about the economy here in the US. Do you think that the consumer is going to be there to back this more than $100 million that you're putting behind this offering that starts to get into our hands in 2026?
Yeah, absolutely. I think if you look at the transportation ecosystem around the world, it's under so much of stress when it comes to infrastructure limitations, when it comes to congestion, when it comes to pollution. And micromobility is a very important piece of that puzzle. More cars, more buses, more trains is not going to be the answer. You need something smaller, something more flexible to complement those other modalities. And we believe that micromobility is a perfect solution to that. It's a large market already. It's growing very rapidly around the world. But if you look at the solutions, they're very weak technically, very poor user experience. They lack reliability. And this is where the opportunity is. And I think the consumer is waiting for something more compelling to hit the market.
RJ, it's a global opportunity on micromobility, and you just talked about how it's a global opportunity for you right now with Rivian and the R2 rollout. This is a difficult time to be a global business. How are you preparing yourself to access the European market when we're worrying about tariffs, and you've always set aside hundreds of millions of dollars in potential policy impacts?
Yeah, it's as you know, it's a very complex environment. And as Rivian, we're spending a lot of time interpreting and understanding what the tariff implications are for us, of course, here in the United States, but I think importantly recognizing that, in particular, Europe may respond. And so how ultimately the tariff structure sets out and lays out is going to have a big impact on some of the decisions we make over the next year. We're staying very, very close to it, but it's, as you've called out, it's a very dynamic situation. And I think some of the uncertainty is what makes it the most challenging to navigate.
RJ, are you in close discussions with the administration itself? Have you been getting a glean on what they're thinking of for the future? Well,
I think, one of the things that's important, just if we take a big step back from all the noise of what's happening, what's going to happen tomorrow with some of the tariffs that have been talked about and will be rolled out. I think big step back is there's a clear directive to drive technology and manufacturing into the United States. And for Rivian, we're a U.S. company. We have just under 17,000 employees here in the U.S. We have a plant in Chicago, or just south of Chicago in Normal, Illinois. We're building another plant in Georgia. And so we're growing rapidly here in the United States. 100% of our vehicles today are produced here, and all of our technology is here. So in terms of the administration's objectives, we're very aligned with what's being asked and what I think the overall policy framework is trying to drive towards. But in terms of how that translates to our expansion in Europe and elsewhere, we do have to recognize that it's a very dynamic environment. Our production footprint may be different than what we were originally planning. But I think all of us, across all the different auto manufacturers are waiting to see how things look once the dust settles.
And that uncertainty, Jiten, I'm sure is affecting you as a team of operators, investors. How are your other founders coping with this moment?
Yeah, I think uncertainty is the key word here. I feel that what is in our control is to focus on two things. Making sure that founders building in the physical industries have the maximum control on the stack, on what they design, what they engineer. If you have control over it, then you're able to make decisions to optimize around different environments. And the second thing is to build that resilience and flexibility in the supply chain so that it is able to navigate, again, short-term, medium-term, and long-term changes in the policy environment. So I think the key word there for our founders is control the controllables. There are things that are going to change, things are going to change back. I think what is most important is to build a resilient strategy and a supply chain network within the company that can navigate all these different environments.
Ajay, a quick 30-second one for you. Do you think you've benefited from people moving away from Tesla for political reasons?
Well, one of the things that I think is often missed as we think about electrification is today only about 8% of new vehicle sales are electric here in the United States. And so when we think about competition and growing our market share, the biggest opportunity is bringing people into our new technology vehicles and introducing people into what it feels like to be in a connected, smart, of course, electric vehicle. And so we really believe there needs to be a lot of choice in order for us to go from 8% to 50%, eventually 100%. We need lots of successful companies. We need Tesla to be successful. We continue to be very successful. We need Rivian to be successful. We need the existing legacy manufacturers to be successful. And so with our R2 program, it's a much lower price vehicle. It's really cool. It's an incredible product. But what that'll do is it'll give customers another choice. And so we think the presence of another choice is going to be important from a brand and product attributes point of view.
Thank you both so much for your clarity of thought today when there is not much clarity in the economy. Jiten Behl of Eclipse, Ajay Scaringe of Rivian. Great to have you both on the show. Thank you. Coming up, can Elon Musk influence another political win? More on that next. This is Bloomberg Technology. Elon Musk is looking to notch another political win by using the same tactic during the Trump campaign, spending millions of his own dollars to influence an outcome. This time it's for the Wisconsin Supreme Court race that could tip the balance in favor of the conservatives on the court. For more, Bloomberg's Mike Shepard joins us now. Shep, I mean, this is a playbook that seems to be repeated even with the big checks.
Oh, very much so. He's putting $17 million of his money through two groups toward this race. And you would think, why do we care about Wisconsin Supreme Court? But remember, it's a swing state, and Musk has taken a deep interest in this, not only because of abortion rights and labor laws that the court could decide, but also questions about congressional redistricting. And that could help tip the balance back toward Republicans with whom Musk has aligned, along with Donald Trump.
$82 million being spent. This is more millions than we've ever seen on such a race, right?
Well, that's right. And Musk has also helped supercharge spending in a lot of other areas. And we saw it during the presidential race and in congressional races. And he is promising to stay on the stage politically going through the midterm elections in 2026. So this is creating for many in Congress and many down the ballot, too, this notion that they will have to reckon with Musk as a factor. And it's also been an issue for some Republicans here and wondering, do I challenge Donald Trump on something? Because if they do, they run the risk of perhaps facing a primary challenge funded by Musk and backed by Donald Trump.
And it's tomorrow, the results, Mike?
Well, we may be hearing as soon as tonight, but it will depend, Carol, on how close this contest is. And we're also watching other contests elsewhere in Florida, where Musk has also put some money. These are two special congressional races. They're not expected to be perhaps quite as tight, but all of them also are going to be a little bit of a referendum on what the public views of Elon Musk and his new political role.
Mike Shepherd, all the inside track, we thank you. Now, that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York, from SF, this is Bloomberg Technology.
live from Bloomberg's world headquarters in New York. I'm Shonali Basak.
And I'm Tim Stanovac. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
And crypto prices have closed out on a rough quarter, where Bitcoin has slumped and cut into the rally that we saw after the U.S. election.
That election saw President Trump return to the White House and usher in a wave of optimism around the industry. The Trump family is getting involved as well. In just a moment, we're going to speak with Eric Trump alongside the CEO of Hut 8.
And speaking of President Trump, he is said to have pardoned the 3 co-founders of the storied crypto exchange, BitMEX. We're going to give you the details.
All that ahead on Bloomberg Crypto. First, though, a snapshot of the market. And you know, it is the first day of the new quarter, so worth taking stock and taking a look at how Bitcoin did in the first quarter of the year. Not so hot. It actually fell about 13% just in the first 3 months of the year. Yes, it was also the quarter where it notched a new record of more than $107,000. That was actually the day after Inauguration Day. Though since then, Shonali, it's down about 20% from that all-time high.
And Tim, I want to show you what happened to crypto-related equities as well, because not only have they erased a lot of the bump they've seen since the election, Coinbase has fallen in the worst quarterly performance since the FTX collapse near the end of 2022, more than 30%. And if you take a look, there are a few outliers here. Despite the announcement of a strategic Bitcoin reserves, stablecoin legislation, and an SEC crypto task force, there are really only 2 of the major stocks in the green, and that is Strategy, of course, a levered play, and you also have Coinbase. Robinhood, the biggest competitor to Coinbase, actually up on the year, still more than 15%. Now, there are more stocks, but digging deeper and deeper into crypto.
I give Shonali the hard job of reading that chart. Hey, despite the lag in sentiment, Michael Sonnenschein told us there's plenty of opportunity.
The executive branch of government that continues to come out publicly and say we want to make the U.S. a crypto hub, a Bitcoin hub of innovation, means that the opportunity around this asset class is going to be here in the U.S.
Delta Blockchain Fund General Partner Kavitha Gupta joins us now. You look at what was experienced, clearly a tough quarter in Bitcoin. What's the narrative, though, moving forward? There seems to still be a little concern, given the choppy waters out there in the macro environment.
Yeah, hi, Sonali. I feel like market it's all about consumers, right? And the liquidity has really dried down. Going back to what we talked earlier also, that tariffs, let's see how the tariffs works out tomorrow. There is a big price in, which has already happened in the market. So people are waiting to see how this really going to play out tomorrow. We also have tax season going out. Plus liquidity with respect to blockchain, crypto, and a lot of tech in a public market space has really dried down. And all those things combined back to confidence in all the amazing stuff which this administration has talked about for positivity about crypto. Is that really going to work out or not? So I see a lot of institutional capital, but that institutional capital is not really bringing the retail. And until and unless we have a retail, which is completely based on the confidence in the government and their policies, we're not going to see a big jump in anywhere.
Kavitha, you made the call back in 2023 that Bitcoin would hit $100,000 in the first quarter of 2025. That ended up coming true, so I'm going to put you on the spot right now. Give us another call for this year, for next year. What do you see?
Oh, Tim, that is so tough given where the market is. I would say at least for some time, we're going to see this market going plus minus 10-15%, a swing out there. I'm very happy ETH moved going around 1800, a little under 1800 to 1900 plus again. Said that overall, whether that happens in Q4 of this year or Q1 of next year, I do see a market plunging back and coming really back. I would easily say Bitcoin 125 to 130. I would say ETH going up to 4,500 because I really believe the technology at the end of the day, as I've always said, like Ethereum is back to being the highest charging gas fee or highest charging revenue fees with respect to DeFi again. So the techs are very solid. All we need is more confidence in this government, the policies, a little bit more stability about what's what's really happening in a geopolitical manner, whether it's war, whether it's tariffs, and that confidence from the retail customer to come back into the space.
One major question I have is, speaking of the government, you see the Trump family and the interest that there has been in the crypto space more broadly, and you find that the oldest sons of the president, Eric Trump and Donald Trump Jr., a firm associated with them, are merging with a company to create American Bitcoin. What do you make of that move, in addition to that move of a stablecoin launch from World Liberty? There has been some question about whether it would draw flows into these projects away from other more long-standing crypto projects.
Sonali, I look at it as a pros and a con. The pro is that there is everything which they are saying, what they are preaching is what they are walking. So if President Trump is saying it, his whole family is also working in that particular sector, saying that they really have confidence in it. So that's a big pro. Whether that Bitcoin mining project or the exchange project or multiple other things which they do takes away from other people, if it's a monopoly, great to have other options. But at the end of the day, I do want to believe into the retail customers' intelligence. On the other side, if I look at it, is I don't know how much is that a conflict of interest and how much is that some sort of getting prioritization above other credible projects. So that is something which we yet have to be seen, that if they are getting into Bitcoin mining, even though they are going with Hut 8, which is a long-standing credible project, what about others? And is there going to be some sort of a preferential treatment out here, which yet to be seen? But overall, I do believe by doing this, we're going to see more American customers sitting in middle of America who have really voted for President Trump to really believe into it more, and we do need that liquidity.
Is that something you're concerned about, Kavita, preferential treatment for companies that the Trump family has partnered with?
That is always a concern anywhere around the world. When you have family very close to, or people have access to the power, doing what power is dictating, you always want to know, hey, are the licenses going to be easy? Are the regulations going to be a little lighter out here? How the execution going to work out? Because the downside of that is if they do not execute it right, if they do end up shilling something which or promising something which they don't have to deliver, we all suffer as an industry, right? This industry is still figuring out its white ground, and we have been in gray for a long time. And if the highest level is not able to deliver, we all suffer as the industry, and I really hope that doesn't happen to us.
You know, one question I have to the point that you were talking about before, Bitcoin, Ethereum, the sour sentiment at the moment. These are two assets that drew tremendous interest when you saw spot ETFs created around them. There was a lot of excitement around new spot ETFs across the industry, but with this kind of mood music, do you think that there can be successful launches of spot ETFs at this juncture?
100%. I can see Solana ETF coming into the market super soon because they have also proven themselves. And I think that has been getting priced into their prices also, if you look at it. I feel institutions still have a lot of belief and faith in cryptocurrency, especially the blue chip ones. There is no doubt. I mean, look at the options, the perps which are getting done. There is still a big flow of institutional capital. What is scary, or what is, I would say, a shaky ground is the retail customer. And that is where we need to get the liquidity back to have a big peak height of 21. If you remember 21, early 22, before FTX crashed down, it was retail customer which has really defined the industry. I think that's what we need. But the institutional capital right now is holding on to the prices what we have.
All right, Delta Blockchain Fund General Partner Kavita Gupta. Kavita, always good to check in. Thank you so much for joining us on Bloomberg Crypto. Well, coming up, Hut 8 Mining just formed the American Bitcoin Corp with Eric Trump as its chief strategy officer. We're going to discuss with Eric and Asher Janut, the CEO of Hut 8. Next, this is Bloomberg.
The president and his family are very positively inclined to Bitcoin. So Bitcoin mining is a key part of anybody's crypto strategy if you're looking at the industry overall. So I think that the fact that they're interested is a good sign. Obviously, I think there could have been a choice for partner for them.
That was part of my conversation with Fred Thiel, the CEO of Mara, yesterday. He's talking about the Trump family expanding its reach in crypto as the administration works on a strategic Bitcoin reserve. Hut 8 just launched American Bitcoin Corp in partnership with Eric Trump and Donald Trump Jr. Remember, President Trump vowed to ensure that all remaining Bitcoin is, quote, made in the USA. That was on the campaign trail. We're now joined by Hut 8 CEO Asher Janut and American Bitcoin Corp Chief Strategy Officer Eric Trump. Big thank you to both of you for joining us. Eric, I do want to start with you. We just heard from Fred Thiel over at Marathon. He liked the idea that you were doing this. Obviously, he wanted you to go with a different partner. Why did you choose Hut 8?
Those are amazing guys. They've been friends for a long time, and track records is really kind of none. But I think this journey, honestly, based on political weaponization in this country. I mean, I saw the worst of the banking industry. I saw, people who are people in this country get deplatformed, canceled for no reason, and it forced a hard asset guy. I mean, listen, we spoke at times on the channel. I build hotels, I build golf courses, residential buildings, commercial buildings. It forced a guy like me into the world of crypto. And the world of crypto makes so much sense. I mean, it is where finance is going. It is the future of money movements around the world. Great compliment to obviously the hard assets that I work on every single day. So I fell in love with it, but I fell in love with it based on a very kind of unconventional, kind of set of circumstance, which was banks trying to cancel out our family because they like our political stance on some things.
Hey, Asher, I want to bring you in here because the press release does say that Hut 8 is contributing its Bitcoin mining rigs to the new venture. What assets are the Trumps contributing? Is there any cash involved on either side of this deal?
Yeah, so and the team invests into American data centers, and as they're building, we came together and I said, what are you guys building there? The vision, what is the idea?
Guys, you are
crypto, Bitcoin specifically, around Bitcoin specifically, and our data centers. And so we said, let's bring these companies' ideas together. Let's go and scale this business.
Asher, we can't hear you guys well. What we're going to do is we're going to go to break. We're going to come back to you after we fix your mics. Of course, that is Hut 8 CEO Asher Janut and American Bitcoin Corp's Chief Strategy Officer Eric Trump. Stick with us. We'll be right back. President Trump has pardoned 3 co-founders of the storied crypto exchange BitMEX. Remember, BitMEX is one of the first big criminal enforcement cases targeting the crypto market. All 3 pled guilty to violating the Bank Secrecy Act in 2022. Bloomberg's Stephanie Lai reported on this. What has been the reaction to the pardons and the rationale for them?
I mean, I think among the crypto industry, what they've been looking for the last couple of months while President Trump has been in office is action. And this is exactly that. On his first day, you know, he started talking about crypto. He signed a couple of crypto executive orders. He also issued pardons. And so this is just the latest in a string of events. Now, some of the crypto executive orders didn't receive a whole lot of positive reception from the industry, just given the fact that it didn't do a whole lot. You know, obviously, they did create a crypto reserve. Not that that really changes the ball on our federal deficit at this moment, but it could have a potentially positive effect in the future. So all this is to say is that the latest move to pardon these 3 founders is just another positive indication that the president is thinking about the crypto industry, that he's committed to fulfilling what many people have been asking for. And a lot of that is just to reduce the targeting that many people in the industry have felt relating to how the federal government has been handling cryptocurrency.
Yeah, your story lists quite a bit. I'm going to read from it. The U.S. SEC has dismissed or put on hold at least a dozen cases or investigation since the president was inaugurated back in January. Companies including Binance, Coinbase, Kraken, Consensus, and Ripple. The question that I have when I saw this news pass on Friday is Sam Bankman-Fried next?
Well, we have reporting from my colleagues at Bloomberg that they have been in talks with people in Trump's orbit to try to seek a pardon for Sam Bankman-Fried. This would be probably the most high-profile pardon that he's given yet, you know, ever since Ross Ulbricht. But beyond that, you know, the fact that he is thinking about these people really does serve an indication to the markets, to the industry, that he's fully committed to seeing through with the crypto agenda.
Hey, Stephanie, one more before we let you go. I'm curious about what message that would send to the crypto industry. I mean, certainly not a figure that is widely looked upon by everybody within the industry as a hero, similar to other folks who the president has commuted or pardoned.
Yeah, I think that's a really great question. You know, not all of the moves that the administration or Trump's family have made have had a overwhelmingly positive reaction from people outside of the White House, particularly thinking about the meme coin. And as you know, Sam Bankman-Fried is somewhat of a divisive character here. And so I think a lot of Republicans, at least in this space, have been saying, at least the president is talking about it. At least the administration is trying to take positive steps. And they're trying to downplay some of these other particularly or potentially controversial moves.
Bloomberg's Stephanie Lai at the White House. Let's stay at the White House and turn now to the White House press briefing, where Press Secretary Caroline Leavitt is holding a briefing.
Of their choosing that best suits their educational needs, and he is going to empower state and local leaders to make those decisions on behalf of our nation's children. Thanks for being here, Mark. Jeff.
Just changing subjects for 1 second. The administration has expressed a complete confidence in how all the deportation flights to El Salvador were conducted. But now that the administration has conceded that there was an error of one Salvadoran national, will there be any reviews conducted? And does the president express any thoughts on the one error that was disclosed in court last night?
Well, first of all, the error that you are referring to was a clerical error. It was an administrative error. The administration maintains the position that this individual who was deported to El Salvador and will not be returning to our country was a member of the brutal and vicious MS-13 gang. That is fact number 1. Fact number 2, we also have credible intelligence proving that this individual was involved in human trafficking. And fact number 3, this individual was a member, actually a leader of the brutal MS-13 gang, which this president has designated as a foreign terrorist organization. Fact number 4 is that foreign terrorists do not have legal protections in the United States of America anymore, and it is within the president's executive authority and power to deport these heinous individuals from American communities. It is a promise he campaigned on. It is a promise he is keeping, and every single person in this room should be grateful for that, considering especially MS-13 is very prevalent and prominent here in the District of Columbia, in Maryland, and in Virginia, and the president, the attorney general, everyone who has been involved in these operations is focused on eradicating eradicating these criminals and terrorists from our communities.
The Vice President said he was a convicted member of MS-13. What evidence is there to back that up?
There's a lot of evidence, and the Department of Homeland Security and ICE have that evidence, and I saw it this morning. Steve.
Has the president fully made up his mind on the level of tariffs to impose tomorrow? We keep hearing about a 20% flat rate.
The president said last night he has made a decision and a determination. I was with him in the Oval Office earlier, and he is going to announce that decision tomorrow. I don't want to get ahead of the president. This is obviously a very big day. He's with his trade and tariff team right now, perfecting it to make sure this is a perfect deal for the American people and the American worker, and you will all find out in about 24 hours from now.
And are the car tariffs going to go into effect on April 3rd as scheduled?
Correct. Yes, they will.
Okay. And last thing, would you like to respond to the Chinese military drills around Taiwan?
Yes, I would. As a matter of fact, the National Security Council briefed me on this morning, and they said that the president is emphasizing the importance of maintaining peace in the Taiwan Strait, encouraging the peaceful resolution of these cross-strait issues, reiterating our opposition to any unilateral attempts to change the status quo by force or coercion. That is directly from the National Security Advisor. Just for you, Steve Holland of Reuters. Monica.
Thank you so much, Caroline. Elon Musk this week revealed that Doge found that the Biden administration issued over 2 million Social Security numbers to illegal aliens, found 20 million dead people marked as alive in the Social Security system. Has the White House confirmed these numbers with Elon, and is the White House looking into correcting this?
I'm not sure about those specific numbers that Mr. Musk cited. I can tell you what the Social Security Administration has said themselves, according to an Inspector General's report that was conducted last year, showing there was nearly $80 billion worth of fraud in this program. We know for a fact there are individuals who should not be receiving benefits on the Social Security rolls, and this administration is focused on cleaning out the waste, fraud, and abuse in every agency, but particularly in Social Security, to make it stronger for our tax-paying, law-abiding citizens who deserve these entitlements and programs. Because you did bring up Doge, I do want to tout the incredible efforts that have been made at the Environmental Protection Agency, and Administrator Lee Zeldin is just doing a tremendous job. Just yesterday and today it will be going into effect. He announced that taxpayers will be saved $8 million in annual lease costs by moving staff out of the 323,000 square feet of space that the EPA currently occupies, which is completely unnecessary. Yesterday, Administrator Zeldin also announced he will be shutting down a museum that the Biden administration built to tell a selective story about the EPA's history and climate change. It was a real pat on the back to President Biden. And guess how much American taxpayers paid for it? $4 million for this museum that I think only 1,000 visitors saw last year alone. And it will cost American taxpayers $600,000 per year to operate this museum. Well, it's not going to exist anymore. We're going to save taxpayers those critical funds. And Administrator Zeldin is very proud to announce that. And just at EPA alone, and the cuts that they have made, they've saved taxpayers more than $22 billion in wasteful grants and spending. Peter.
Thank you, Caroline. When the president goes down to Florida on the weekends, does he ever hear from, there are so many retired folks down in Florida, does he ever hear from any retired Americans who are stressed about these wild swings in the stock market because of the tariff uncertainty, and they're sitting there on fixed income or living off a 401k, and they don't know how much money's going to be left?
Well, certainly they are legitimate concerns, and the president takes those concerns.
We're back with Hut 8 CEO Asher Genoot and Eric Trump. They just teamed up to form the American Bitcoin Corporation. Guys, thanks for your patience while we got that audio figured out. It's good to have you back both with us. Asher, we had to interrupt our question to you, so that's exactly where I want to pick up. The press release does say that Hut 8 is contributing its Bitcoin mining rigs to the new venture. What assets are the Trumps contributing, and is there any cash involved on either side of this deal?
When Eric and I really talked about our ideological philosophy behind Bitcoin and crypto, I asked, what are you doing with American data centers? And he gave me the background, what they're doing, what they had planned. And I said, let's bring these things together. We'll contribute our rigs into the entity in return for an 80% stake. And then we'll go build and scale and build this business together rather than from kind of a startup from a scaled operations already. So that's the plan today. Is American Bitcoin is a scaled mining operations day one, and we're going to go and build the biggest company in the sector.
Eric, I'd love some more specificity on the ownership here, too, because to the point that Asher was making, the 80% goes to their company, 20% to the American data centers. So what percentage stake do Trump family members have of this new company?
Yeah. That'll be disclosed in time, but it's majority stake, and we're very proud of it. I mean, this is an industry that I've come to love. Bitcoin is clearly digital gold. It's clearly the currency of the future. It's being embraced all over the world, and it's exciting to do this here in America. And when you look at when you look at their data centers, when you look at what they've done, what they've built, their capabilities, it made a whole lot of sense to do this with them. They're pragmatic. They're great guys. They're fast. They're able to deliver. They've done a great job, and then you take it, and you combine that with an asset that's appreciating 60% year over year over the last 10 years. You take a company that's able to literally mine Bitcoin for almost 50% of what it's trading for literally right now, and they're able to bring up the scale based on the pipeline that they have. It's a dynamite combination, and I think we're going to take the industry by storm. I've never been more excited about a project, and we're going to do incredible things together.
Now, according to reports, there is a plan to see this company go public, American Bitcoin. Asher, given that you own 80%, what is the plan? What is the roadmap to seeing that happen?
The vision here is to give shareholders a pure play mining company that has the ability to produce Bitcoin cheaper than just buying it. And so continuing to build the strategic reserve and be one of the largest Bitcoin miners and Bitcoin holders out there. For Hut 8, this made sense because we have investors that are investing into the infrastructure side of the business, into the AI side of the business, and into the Bitcoin side of the business. Now, investors can invest directly into the Bitcoin exposure, meanwhile investing into the energy exposure on the Hut 8 side for energy infrastructure. So you can see this long-term as two sister publicly traded companies, one that's energy infrastructure data centers, and then the other one that's Bitcoin ASICs in the reserve, and together they form a vertically integrated company that has some of the best economics out there and is going to be a leader because they're able to synergize together to scale for their individual shareholders.
Eric, World Liberty is launching a stablecoin. You're now working in mining. Your father has made stablecoin legislation a priority and also has actively courted miners and benefits financially from crypto in multiple ways. How are you, World Liberty, and the White House managing perceived conflicts of interest?
Yeah. Well, there are no conflicts because I don't work with the White House. I've been in private industry my entire life, and we started World Liberty long before my father ever got elected to the White House, right? I mean, this is something we believed in crypto for a very long time. We believed in DeFi. As I said, before we got cut off, before our audio got cut off, I mean, we saw the worst of the banking institutions, the financial institutions, as they tried to cancel, and not only myself, my family, our companies in every way, shape, and form. And unfortunately, people around the world are seeing that every single day. And when you look at DeFi and the power of that, I mean, it's really restoring the power back to the people. There's nothing that DeFi, there's nothing that cryptocurrency on blockchain can't do better, cheaper, in every way faster, more transparently than the financial system that we have right now. Guys, as I sit here in our organization, I mean, there's not a Friday that goes by where I'm not chasing a swift wire transfer, hoping it comes in on, before the 4 p.m. deadline, or trying to send one out. You can transfer millions and millions and millions of dollars worth of Bitcoin overseas, while having a glass of wine with your wife at 11 o'clock at night. That's a beautiful thing. Our financial system in this country is antiquated. Our financial system in this country has been punitive to so many different people. And so we're reinventing the financial system, and American Bitcoin is a big part of that. Hut 8, using their power and their data centers, is a big part of that. And obviously, World Liberty in terms of stablecoin, which by the way is going to bring tremendous wealth into the United States, as well as DeFi is a large part of that. I'm all in personally. I really truly believe in this with every part of my heart and soul.
Eric, it's pretty clear your interest in crypto, but so is the interest from the president as well. What communication is there between you and the president about crypto, given the administration's focus on making it more accessible? Should there be a firewall if there isn't already?
Yeah, virtually none. I can tell you my father has always been a big part of cryptocurrency. He's frankly one of the things that got him elected. He is out there and he became kind of champion of an industry with the most unusual people. And when I say that, with people who traditionally maybe weren't Republicans, people who might not have been hard asset people like my father was his entire adult life, but he fell in love with an industry because the regulators were going after that industry. They were going after the Ashers of the world the exact same way as they were going after our family. They were throwing lawsuit after lawsuit on them for no reason whatsoever. They were canceling them. They were debanking them. Coincidentally, because of politics, they happened to be doing the very same thing to our family. And so it brought maybe two unusual groups together, our family and this movement, as well as the crypto industry. And there's no doubt, and there's no shadow of a doubt that the crypto industry, the Bitcoin industry, him showing up at every single crypto conference and speaking at it, being the first presidential candidate to do so, really opened his eyes to a lot of the industry, but also brought this massive continuity between the crypto industry and our family. And it's a beautiful thing. And, this started long before, obviously, he won the election. But my father's a massive believer in cryptocurrencies, as am I. And really our political experience is what brought us to the table in this amazing new kind of financial frontier.
Eric, I hear what you're saying when you say there are no conflicts of interest and you're not communicating with your dad about crypto, but still, I would think that there are critics out there who see that the actions taken by the White House and your family maybe are not necessarily actually for the crypto industry, and instead they're enriching your family, rather than making the industry better. What would you say to those people?
Well, we must have had hell of an intuition if we popped up a company a year before he was ever even elected, president, thinking that could somehow enrich us. I mean, by that same standard, lower energy prices enriches us because we use gasoline in our lawnmowers at our golf courses, right? I mean, it's kind of a ridiculous notion. The entire world is going toward the crypto industry. There's no question about it. The financial system is antiquated. The financial system in this country is no longer 9 to 5. It's just the reality, guys. The financial system is going to start operating on a 24-hour, 7-day a week.
I'd only push back and say, somebody could argue, well, he's launching meme coins that critics would say don't necessarily have any value inherently. That could be an example of that.
I don't know. The meme coin did awfully well. It went to, I think, a $35 billion market cap overnight, right? And I think that was the crypto industry coming in saying, we love the Trump family. We love Donald Trump. This is the guy that stood behind us. This is the guy that believed in us when Gensler was going after all of us, when they were stripping bank accounts from us left and right, when they were, not giving us the rules of the road, but then trying to imprison, so many good people in the industry who just believed in a higher form of technology and a more efficient form of technology. Guys, crypto's here to stay. And America either leads the way in this revolution or they get left behind. I can tell you, from real estate and what I do, and I've been on these shows a million times, I'm all over the world, and everywhere I go, every country, every person, every big corporation is pushing cryptocurrencies.
Eric.
They believe in it. They want it. And America either leads the way or they get left behind.
One more question about World Liberty in particular. Between the meme coins and how much money was raised, and World Liberty raising $550 million from governance tokens, what's the money being used for? What are the use of proceeds?
Well, they use it in case of World Liberty. So many of those proceeds are actually getting, put into the treasury and further reinvested into crypto, which is a lot of fun. And, we publicize our wallets every single day. You can go on right now and see exactly what the holdings of World Liberty is. And, American Bitcoin is going to have that same transparency. So you see exactly what we have. You'll see what we have in the treasury. We believe in cryptocurrencies. We reinvest in cryptocurrencies. And again, I think that's really reassuring for the industry that you're not just going in there and pulling the money out. You're keeping the money exactly in the very kind of vehicle that you believe it should be utilized in.
Ash, I want to bring you.
The vision of the business is very clear. It's American Bitcoin. We want to build in America. We believe if you think about the beauty of bringing energy, bringing the gas that creates the electrons into the data center infrastructure, into ASICs to derive compute that securitizes the Bitcoin network, we're bringing together crypto and what makes America great, which is the infrastructure we own, the energy policies that we have. And so I think the commentary and the conversation I've been having is there should be no secret in terms of the administration and their stances on crypto. I mean, people who voted last year, they knew exactly the crypto president they were getting. And so anyone can buy Bitcoin, anyone can have that exposure. And I think today, as we launch American Bitcoin and as we go and talk about the business, it's very clear. We believe in Bitcoin. We believe in America. We believe in the energy infrastructure that lies here, and we want to build a company that's leading within that sector and that brings all those things together that we're super passionate about.
I think this is an important question in the vein of what this means for a strategic Bitcoin reserve. Initially, the idea here was forfeited Bitcoin, seized Bitcoin, but the creation of this venture, what does it mean for the ability to mine Bitcoin for the creation of a reserve?
Look, I think if we talk about a reserve for American Bitcoin, we're all in, right? Hut 8 was one of the first publicly traded companies that held Bitcoin on the balance sheet. American Bitcoin will mine Bitcoin. It will hold the Bitcoin. It will create the exposure. I think whatever the federal, state governments, there's a lot of state governments that are bringing on strategic reserves as well. I love the idea of this adoption, and we'll lead by example as we have historically. And with American Bitcoin, we will mine Bitcoin for cheaper than it costs. We will hold Bitcoin, and we will be long-term bettors of the asset.
Hut 8 CEO Asher Janut and American Bitcoin Corp Chief Strategy Officer Eric Trump, we thank you both for joining us today on the heels of the creation of a new company. We're looking forward to seeing exactly where that goes. That's all for Bloomberg Crypto today. Join us again, same time, same place next week. For me and Tim, this is Bloomberg.
Welcome to Bloomberg Markets. I'm Vonnie Quinn. In just over 24 hours, President Donald Trump is set to announce highly anticipated tariffs. The levies are expected to affect a wide range of nations and industries. And just moments ago, White House Press Secretary Leavitt saying that tariffs will go into effect right after that announcement. We were wondering when they would go into effect. Well, she just said that will happen immediately. And that has arrested market gains somewhat. We had seen the S&P 500 climb. It is now up just 0.1%. The Nasdaq 100 still up 0.4%, but we have reversed again some of those gains. If you look at the 2-year yield, we are seeing more of a drop there as well as money continues to flow into the safe haven of fixed income today.